All right. Hey, Ian. How you
What's going
doing, my
on?
friend?
Living the dream, another day in paradise.
Love that. Hi, Jamie.
Hey there. Oh, hold on. I have us. Okay, we're gone.
She's like, I got to get all my stuff situated here. Well, thanks, guys, for joining me. I appreciate it.
Happy to be here.
Absolutely.
Absolutely.
All right. Well, let's get this thing started. Here we go. Well, welcome, everybody. I hope you are enjoying your evening here on the Book of Faces. I am Melissa Haley. I am the broker at North Texas Top Team Realtors. And tonight we're going to be talking about, should I buy a house or should I rent a house? And how does that happen in today's current real estate market? So while we're waiting on everybody to just get on the Facebook Live and get situated, let me just introduce everybody. First, I have Jamie Mumley with me, ladies first. Sorry, Ian. But Jamie's one of our awesome realtors at the North Texas Top Team. So Jamie, tell everybody a little bit about yourself.
Well, I have been a realtor for 7 years. Prior to getting into real estate, I worked in advertising, sales, and marketing for a number of years on the broadcast side and also in the corporate world before I made the shift over to residential real estate, which I absolutely love. I'm a certified residential specialist, which is the top designation you can earn as a realtor. And in my time in real estate, I've helped over 125 families, which has been very gratifying. And in my spare time, I do triathlons. So when I'm not helping people buy and sell houses, I'm usually out running, biking, or swimming, or spending time with my husband and our 3 dogs.
Awesome. You mean, wait, realtors have extra time? Do they have spare
I
time?
mean, usually early morning or late at night, which is why I look like I do with these dark circles. I'm also a huge Dallas Stars fan. Got to put that out there.
Go
So the
Stars.
last couple of nights have been late nights for me.
Yeah, for
But worth
sure.
it.
We love the playoffs. We love it when the Stars make it to the playoffs.
Indeed, we do.
Awesome. All right. Well, I also have Ian Jones with me. Ian, we love us some Ian Jones. First of all, he's a great mortgage guy, but second of all, he's a pretty funny guy too. So Ian, say hello and tell everybody a little bit about yourself.
Yeah, I'm Ian. I'm a residential mortgage loan originator, and I decided to get into this world because my first home purchase transaction was not a whole lot of fun. I didn't really understand what was going on, and I decided if I ever got into this world, that I was going to make sure that everyone understood everything from A to Z. And I like to tell them that by the end, they'll be able to originate their own loans.
I don't want to buy. I don't want to buy and have to learn how to originate my own loan, Ian.
I will
Do.
also help you through the process, but you need me. You can never buy or sell a house without me, just to make that clear.
That's so much better. I love that. Ian, you want to try that one more time?
You will never buy a house without me.
I love that. Love that. All right. And then last but not least, behind the scenes, nobody can tell she's there, but she is. We love us some Gabby Powell. Man, she keeps everything rolling. She's going to make sure to connect all of us on the social media platform. So feel free to comment on our Facebook Live, and Gabby will be happy to respond back and answer questions that you might have, or make sure she's connecting you with all the folks that are here today. So thanks, Gabby, for being here. Thanks, Jamie. Thanks, Ian. And by the way, if you are watching with us right now, don't go away. Stick with us, because later in the evening, we're going to have a link that we're going to give you to get some free information about the home buying process. So stick around. Don't go anywhere. You don't want to miss any of our good info. So getting to know everybody. Thank you for doing that. Let's kind of start into our topic. The stuff that we're going to talk about today is, I mean, it's kind of a big question, right? Should I buy a house or should I just keep renting? And I think, some people are worried because of what's been going on in the real estate market over the last few years. The prices have gone up. And then interest rates, and those have started going back to a normal level. Instead of the craziness that we had going on during the, immediate months after the pandemic, or actually a couple of years. So with all of that being said, the big question is, should I buy a house? So I'm going to start with Ian. Ian, should I buy a house or should I just keep renting?
Well, I mean, simply put, someone much smarter than me once said, you should buy real estate and wait. And what they meant by that was no matter what, your real estate's always going to increase in value, and all you have to do is wait. That's why we see so many companies purchasing houses as long term rentals and things of that nature, because real estate is, by all accounts and purposes, finite, similar to water. So if you can get yourself in on purchasing a home, you do yourself a long term favor in building a lot of equity. I mean, I bought my house for what I did in 2016, and I could not believe what my property taxes said the other day.
Yeah.
So, I mean, it just, you buy real estate and you wait. So if you, whatever you can buy, whatever you can afford to purchase, it should appreciate in value.
Yeah. I love that. That's a good word. All right. So same question to you, Jamie. Should I buy or should I rent?
I think it probably depends upon the individual circumstances to take that into account. I agree with Ian that real estate is always a good investment. And the home that you buy today certainly doesn't need to be, and it's probably not going to be your forever home. But what that home does is it helps you have a stepping stone, because it's really difficult to save up, $100,000. But if you buy a starter home or even a condo and live there, first of all, you're going to have a fixed rent amount, if you will, or a fixed mortgage amount, whereas your rent year over year is going to go up. So you'll always know what your payment's going to be. But beyond that, you'll also be building equity. So when it comes time to buy your forever home or to take the next step into a larger home or a family home, you'll have the equity that you've built up over time from that house when you sell it to roll into a future property. So, and I think that's a huge help. And I know, having worked with a number of first-time home buyers and some who have waited, they may have had some regrets that they rented for as long as they did, because at that point when they went to buy, they were like, well, how are other people my age affording, to buy $500,000 houses? Well, simply put, it's because instead of renting and essentially paying off someone else's mortgage, those people were living in a condo that they had purchased and building equity. So then when it came time to buy the larger house, they had the money from what they put into the house they were living in to roll forward. So I think it's definitely a good idea if you can afford to. And that's certainly something that you have to analyze on a case-by-case basis. And I know that myself and Ian are very hands-on, and we're also, we look out for our clients, and we very much consider ourselves fiduciaries. So we can kind of help you assess whether or not it makes sense to buy, or if maybe you should consider waiting for a little while.
Okay. I think that's good. But you said something that in the kind of the beginning of that whole talk where you said, you may not be able to save up $100,000. And I was like, I'm renting and you're telling me I have to save $100,000 because my rent just did go up, right? Because you said rents are going up and that's what's happening. So do I really need $100,000 to buy a house? Do I need is a 20% down really like what I need?
No. And what I will say now, in this particular instance, I was talking about people who were confused as to how come they couldn't qualify for more. But in the real world, I mean, what you need for a down payment is a minimum of 3.5%. If you're a first-time home buyer, there are conventional loan products that are 3% down. And for those of you who have parents that bought a while ago and might be telling you that you have to have 20% down, I think the important thing to know is that the way mortgage insurance, which is what you pay if you don't have 20% down, is calculated, has changed greatly from when our parents were purchasing their property, or even from when I first purchased my first home. Now they take into account your credit score and how much you're putting down. So in some cases, I've seen mortgage insurance as low as like $75 a month. If you're doing an FHA loan, the FHA just reduced their mortgage insurance by, I think, a third to 0.22 or 0.022. Is that right, Ian?
So it went from 0.85 to 0.55. So if
0.55.
we're
Okay,
talking
so it's
about like,
down 0.3.
yeah. So if you're talking about what that really looks like as far as a transaction goes, I mean, we're talking about mortgage insurance, it being less than what our parents were spending and things like that. In an FHA based scenario on a $300,000 purchase with 3.5 down, you're looking at previously at 0.85, you're looking at 205 a month, right? Now, if you switch that over to what they're going with now, because they're lowering mortgage insurance, because rates did go up, right? We're talking $132. That's a pretty stark difference comparatively speaking. So no, you're dead on. They're making mortgage insurance cheaper on the conventional front because obviously they want to sell mortgage insurance, right?
Yeah.
And then the government stepped in and they also decreased it. So having a lower down payment, a lower barrier to entry is going to help out your new home buyers and your first time home buyers. I mean, it walks hand in hand.
Okay, so my mortgage insurance is cheaper if I'm only putting less than 20% down, but I just want to make sure we're clear. So if I do put 20% down, I don't have mortgage insurance?
That's correct.
Okay, just making sure. Okay, so I can put 20% down. I can if I have it. But if I've been renting and I'm paying and my rent's going up and I'm starting to struggle and I'm like, man, there's no way I'm ever going to save any money, much less, 20%. So you said I can get in with a conventional at 3% or FHA at 3.5. Do I have any other options? What if I don't even have 3%? Ian, is there any kind of program for me, home buyer who just does not have any cash really to start with?
Well, there's always your down payment assistance, abbreviated to DPA, right?
Okay.
And that's through what we call TSHAC, which is a shortened abbreviation for, let's see.
Texas State Affordable Housing
What is the C though? Haha, gotcha.
Committee.
But TSHAC is to Texas, right? And it'll give you down payment assistance, up to, I believe, and I need to check to see where it's at right now. I'm actually looking it up because some days you get all the way up to 6, some days you get to 5. But let's just say realistically 3% has pretty much always existed. But they will give you 3% towards your closing cost, down payment, whatever it is that you need based on their criteria to help get you into a home.
Wow. Okay. So hang on. If my down payment's 3%, but you're saying if I maybe qualify through TSHAC for down payment assistance, DPA, that they might give me more than 3% so I can use some of that for my closing costs?
Absolutely.
100%.
Okay. All right. So I feel like as somebody who's maybe in that place where they're renting a house and they're just feeling stuck because rents are going up and I can never feel like I'm getting to save, I at least potentially have the opportunity to get a down payment assistance program to help me offset my down payment and my closing costs. Okay. Is there anything else that I might have available that might put me like with a 0 down payment?
Well, you could go USDA, and
Okay.
that's going to be a loan out in the
thought-
more rural areas.
Wait, I thought those people did beef.
No, this is another government body for home loans in rural areas.
Okay.
And now they're going to be property specific on where you can qualify for a USDA loan, and it does have income limits. But as far as 0 down, you can go USDA, and they'll even allow you to roll the closing costs into it. So you could truly come to close with $0.
Okay. So there's really no excuse. If I'm renting and I want to buy, I really just need to pick up the phone and call Jamie and Ian and be like, guys, I want to buy a house, and we'll explore different options that would help me potentially be able to make a move.
Correct. And of course, there's the VA loan. Everyone knows that commonly as the 0 down loan. So let's not
Okay.
forget about our veterans simultaneously.
Well, for sure. And, yeah, what if it is somebody who's renting today and they have that question and they are a veteran? Hopefully the veteran might know, this is a benefit to you. Thank you for your service. But I have to say, I think when you get out of the service and they give you this just packet of information, there's probably a lot of benefits that maybe our service people don't even know that they have. I'm hoping that this one's a big enough benefit that they talk about it more, but it'd be great to know that as a service member, I can buy a house with 0 down on a VA loan.
Not
That's-
only that, I believe the VA interest rate is typically lower as well. Is that the case, Ian?
It is a very competitive rate compared to conventional, correct?
Okay, that's good to know. All right. Yeah, because, some people are worried right now because, they keep hearing on the news maybe that rates are changing and rates are going up and whatever. But, rates, I have to say, I think right after the global pandemic began, the government said, we need to spur people to do things. And in order to do that, we're going to just ridiculously deflate the interest rate, probably to a place that wasn't sustainable. Well, obviously to a place that wasn't sustainable. And now are we just kind of coming back to something that's a little bit more normal? Is that kind of where we're at, Ian?
I mean, I would say that we're coming back to a level of normalcy. I hear a lot of people, and I even remember this from a couple months ago. They're like 4%. And I'm like, yeah, 4%. That's where rates are at. They're like, my friend just closed it at 2%. And I was like, that's awesome. I cannot wait for them to tell their great grandkids and their grandkids about how they bought their first house and they had a 2% rate on it. But right now, we're not in the middle of a pandemic at the moment. So they've got to increase the cost of borrowing.
Yes.
So yes, as time moves on, rates have gone up because they're trying to quell inflation, et cetera, et cetera. We're just going through our normal cycles, right? You can look at everything historically and see that every 10 years, I don't know why it's every 10 years, but we go through these changes. And so right now we happen to be going through a change. And with interest rates being as high as they are, you always have the opportunity to refinance. The question I get the most is, how long do I have to wait to refinance?
Ooh.
And I'm like, it's really easy. You can refinance whenever you want. There is no time limit that you have to wait to refinance after purchasing your home. So if you bought in at 6.99 and rates the next day are 4.99 after you've closed, guess what? You're going to have to wait long enough for the servicer to pick it up so you can refinance it, so we know where it's at to be able to refi it. But yes, technically you can refinance. There's
Wow.
no waiting period.
Well, I think it's funny that you said maybe it'll be cool one day when they can tell their kids and their great grandkids and whatever that they bought their first house at 2%. Because let me just tell you, my parents bought their first house at 18%.
Same. My mom was like, I don't understand why everyone's complaining about this 6% interest rates.
Yeah, that's also a story that's been handed down. My great grandmother bought her first house at 18%, right? I mean, it's true. They can swing one way or the other, but somewhere we're in the middle, which seems like the right place to be, right? So,
Absolutely.
yeah, absolutely. So, Jamie, you were talking about some people that you maybe, I think you had worked with them, you said, where they were like, we can't get qualified because we don't have $100,000, but we don't understand how our friends have $100,000. Can you talk a little bit more about the equity stuff and maybe another place where I could get some money if I do need some down payment? Maybe I don't qualify for down payment assistance and I really don't want to live out in the country. So I need to be in town and I need some money. What are some ways I can get a down payment?
Well, you could also get gift funds from a family member. If your parents have funds available, you can borrow from your 401k if you have a 401k. So those are a couple of options. And of course, the equity portion for the people that buy a house, maybe an entry-level house, and wait, typically real estate over time is going to appreciate. And of course, the last couple of years, it's appreciated considerably. Of course, now it's slowed down a little bit, and we'll probably see a little bit more normal, maybe 3 to 5% appreciation year over year versus the 20% that we were seeing. But basically what that means is your house, just by owning it, unlike a car, which depreciates over time, real estate typically will appreciate. So if you bought your house for 300,000 and 5 years from now, you decide that you're going to sell it to try to move into a bigger house, generally speaking, it's going to have gone up in value. So you may be able to sell it for 375 or 400 down the road. And by that point, you will have paid into it. So not only do you have the equity from how it's appreciated, but you also have the money that you've paid down on the loan. So all those things work together to give you a chunk of money that you can roll forward. Or if you're someone who purchased a home and you were lucky to get it in the 2% range, maybe if you have the ability to do so, you hold on to it and you turn it into a rental property and an income producing property and purchase another home, and then you're just building wealth. So that's another way to look at it.
Yeah, I like building wealth. Ian, do you like building wealth?
I have been known to enjoy building wealth.
I
And
mean,
to kind of piggyback on what Jamie was saying in regards to the person who owns their property and then is buying another one and putting down the obscene sum of down payment, right? I explain it to everyone like this when a friend, family member, anybody starts toying with the idea of buying a house. I always say you only really need to save up a large sum of money once. Like, what do you mean by that? I'm like, well, on my first house, we saved up all that money and we bought the place on FHA 3.5% down. And then the next time we went to go buy a house, we only had a few $1,000 in the bank account, but we had $100,000 in equity in the other house. So we had our option, we had our earnest, and we sold the house, bought a new one on contingent, and we didn't have to save up an obscene sum of money. You really only have to save your nest egg one time if you're just continuing to change and use your equity, for the next purchase. Now, in Jamie's second part, where you're turning it into a rental, if you can do that all day long, you should just turn them every
well,
2 years.
well, yeah, because okay, if I save it and I keep it and I rent it out, now don't I have some income coming in? Like maybe my house payment, because my house payment's going to stay what it is. And maybe my house payment's $2,000, but I'm able to rent it for $2,800. I'm making $800 a month and I'm not even doing anything. That's a lot of money in the end of the year. I just gave myself a pretty nice raise is what I just did, right? From my day job. So
Exactly.
yeah, I can see where that could also be a benefit to somebody who's ready to buy a house because they've got a little bit more income than maybe they had before, right? Without that rental. So speaking of rentals and maybe what rent might cost or what I might be able to get for a house. So can we just kind of talk about what's the tipping point if I'm renting a property and I'm only paying, $1,800 a month in rent? Am I going to be able to buy a house in the Dallas-Fort Worth area, like in town, and keep my rent and my house payment are going to be the same at like 1,800? Or is that kind of unrealistic? And at what point, what number do I probably need to be at? Like if I'm paying rent at this price, I might as well just buy. Any thoughts or suggestions?
Yeah, I mean, as far as your scenario goes, and you're talking about DFW, you're renting, say 600 square feet, right? Let's think about it in terms of square footage. You're in a
Okay.
600 square foot apartment and you're paying $1,800 a month.
Mm-hmm.
If you're trying to be in Dallas proper or even its surrounding, northern parts, it's really going to be a tough one. I mean, let's be honest, let's rip the Band-Aid off, right? But what we are seeing is the further north that you get, we're talking Salina and the like, still able to use 75 to get back to town, right? But we're seeing houses that are in a great price point, one, and two, the property taxes are much lower because the Achilles heel with our property, our houses here in Collin County, Dallas County, is that they've just accelerated at this insane rate of value, right? Jamie was saying 20%, 25%. That's crazy. And of course, the counties are going to want to collect that money. So what really kills off being able to buy something in that range with that budget is going to be the fact that the property taxes are going to be really high.
Mm.
So moving further north, I mean, heck, even further south, I think I saw some things in like Midlothian and up that were great price point, phenomenal houses, low property taxes. It's just sometimes you got to make a little bit of a drive, and we affectionately refer to it as sometimes drive till you can afford to buy. And then you use that house as your stepping stone, right? That we just discussed for the next person who's looking to do the same thing that you were doing, which was buy a house in a good area at a good price point, and then you move to where you're really wanting to be, right? Your first home is never your forever home. It used to be that Wylie, Texas was like far away, right? And you could roll out there, buy a house at a great price point and live there. And then, you know, whatever happens, that was the driving till you could afford to buy. And we did that. We bought our first house in Wylie. We sold it, bought a house where we really wanted to be in the city we wanted to be in. And our mortgage payment remained almost the same because we were able to take that equity, move it over to the next property and put it down on it. So you can continue to make these lateral moves with property after property after property as long as you're moving equity from one to the next.
That makes sense. So maybe not directly out of my rental into my house at that price point, but because the price points are up to, you know, Jamie said we had this big appreciation, but maybe going farther out, use it as a stepping stone and then move the equity. I really like where you're going with that. It's good.
We see it happen all the time, especially on our first time home buyers. I mean, even in Denton, you've got really great, you got attractive homes at an attractive price point. Arlington, all those areas and things like that, you still have homes at the, I would say 200, 225 price point that are not, I mean, at this moment in time, disclaimer right now, not unbelievably competitive. Now, maybe there's 300,000 people watching and now they're all going to get really competitive on those areas. But I'm telling you, my first time home buyers are having great luck in those areas and they're finding awesome properties and they're just dealing with their commute for a little bit. And then they're like, we're going to sell it and we're going to buy something else closer to where we're trying to be. It's smart. You deal with it in the interim and then you move where you want to go when the time comes.
Yeah. Okay. Jamie, any other thoughts on that?
Well, I would also just say with rent continuing to increase, I mean, you're kind of in a situation where you're almost held hostage by your rent, because what you have to consider is if your rent's going up to a point where it's unaffordable for you, then you're going to have the cost of actually moving, whether it's renting a moving truck, hiring movers, what have you, to get into another property. And so you'll have that expense, not to mention the time and effort to do so. So with those things in mind, it might make sense to consider buying. Just because you will have sort of a fixed idea. Now, of course, your payments may change a little bit because taxes change and homeowners insurance can change slightly. But at the end of the day, you'll have a good benchmark of whereabouts your payment's going to remain month to month.
Okay.
Correct. And as long as you're doing your due diligence and, you know, appealing the property taxes and filing your homestead, the increase will be pretty negligible year over year. But you do have to do that one step, and it is kind of brutal. It is what it is.
Yeah. Yeah, I agree with that. So actually, let's chat about property taxes for just a second. There's a lot going on with property taxes right now. I know the other day when we chatted a little bit, I was kind of filling you guys in on what the realtors are doing, because the realtors have what we have is we don't just sell houses, right? We also fight for private property rights. And right now in Texas, in our current legislative session that's happening right now in 2023, property tax reform or changes are totally on the ballot. This is what is going on down in Austin. And so the House of Representatives is saying, hey, we think we ought to do this. And they want to put some caps in place. And the Senate is saying, hey, we want to give some further homestead exemptions to reduce the actual price that we're taxing you on. And the realtors are monitoring it. They are, as a group, our Texas Association of Realtors down in Austin has folks that are paying attention to the bills and what's going on, and just trying to make sure that we can advocate for what's best for property owners. Because at the end of the day, our goal is to make sure that if you buy that house, that you're not going to find yourself in a year or 3 years or 5 years down the road, like priced out of your home, not because your mortgage went up, but because your property taxes went up so significantly that you can't afford to not pay the house payment and also pay for those taxes, right? So there's a lot going on right now, and I think it's important that people just make themselves aware of what those look like. And if it's okay with y'all, I do want to just kind of camp out on this for just a second and just mention that one of the things that's up for discussion is that cap. And it sounds great when you start talking about, let's lower the cap, because currently there's a cap there and it's 10%, right? Do y'all know what I'm talking about there? And y'all agree that it's 10% cap on your homestead. So if my house is worth and being taxed at a value of $300,000. Well, I mean, let me back it up, make it easy math. If my house, if my house is taxed at a value of $100,000 and I have a 10% cap, then next year they can only tax me at $110,000, right? But one of the things that's out there is, let's lower that cap from 10 to 5, but let's put it on every property. And I feel like it sounds really good on the surface. Ooh, I only have to go up 5%. But I think that the problem really becomes it's on every property. And that means commercial property, non-owner occupied property, like a landlord is going to be able to take advantage of this. And I think that in commercial property and in a landlord situation, they're making money on that property, and they probably could more easily bear the burden of a higher tax rate, of a higher tax bill. But that guy that just moved in and he didn't get a raise at work, he doesn't have the ability to pay more. And I think what's going to happen is, if we were to lower that to 5% for everybody across the board, the city's still going to need their money. They still need fire and police and libraries and all the things that we do, right, with our tax money, and schools. That's the big one, schools. And I feel like what's probably going to happen is those homeowners that got that 5% cap and thought it was going to be great, what's going to happen is they're going to say, well, fine, if we can only bump you up to 105,000, we're just going to jack the percentage that we charge, because the taxes still have to go up.
Right.
And I feel like that's very problematic for a homeowner, an owner occupied homeowner. Do you guys kind of see where I'm going with that? And do y'all have any thoughts on that before we keep going?
No, oh, go ahead.
No, you go ahead, Jamie.
I was going to say, yeah, I think that could be problematic for sure, because the money's going to come from somewhere. So
yeah, that 2% tax rate's going to go to 4%, right?
Now, using that surplus to maybe have a, I don't know, property tax holiday for a minute. I mean, just let everybody get a nice little welcome reprieve, and then maybe roll it back to a version of business as usual. But just seeing the way that we kind of operate all these things is kind of, oppressive to some people. And especially if you're coupling it with a mud tax, it really gets brutal for those brand new builds where the builder, took out the mud and made all that happen. So I really feel for a lot of those people in the new builds, because my taxes, have been established since 1977 when they built my house, right? So them going up over time, it really has just been a slow, very small incremental increase. But if you're talking about going from raw land to now improved, right, with the mud, and they're raising property taxes at the same time, it can be pretty brutal. So figuring out a nice little middle ground on all that stuff would be phenomenal for me, you, everybody here, everybody buying houses, and everybody who owns houses.
Yes.
So yeah,
I would agree with that.
People are smarter than me when it comes to this stuff. So I'll just let those people, bicker about it for God knows how long, and maybe we'll come to an agreement.
Well, I do want to circle back to MUDs and have Jamie talk about that, but let me just tell you the flip side of that. Because remember I said a minute ago that there was the House and then the Senate, and they got to come to terms together. And right now, I don't know where it's going to land, but the Senate has a completely different take on it. And right now we have a homestead exemption that if you have a homestead on your house, you get a discount on the value before they tax you on your school taxes. So that saves you money on your taxes. And it used to be 25,000 and then they bumped it up to 40, and the Senate's talking about, let's just jack it up to 70. So if I went back to that $100,000 example and I have a 10% cap and my house goes up to 110, but then they're going to take $70,000 off, I'm hardly paying tax on anything for my school district, right? So I feel like that's probably a better way to move forward, but I think we're going to get some kind of hybrid version regardless with whatever happens down in the legislature this year. So y'all, if you're thinking about buying a house or if you already own one, pay attention to what's happening in Austin. It's important. All right. So man, taxes are boring. So let's go to something else. Who wants to keep talking taxes? Let's not. Jamie, will you kind of just cover a little bit about MUDs, because Ian brought them up. And I think that that's just important for people to be aware if they are looking at new construction, and you probably help people in MUDs and PIDs and all of those things. What's that all about?
So a MUD is a PID. A PID is a property improvement district, and a MUD is a municipal utilities district. And essentially what that means is when a developer or builder purchases a piece of land and they're building on it, they will oftentimes talk to whatever the jurisdiction is. Usually, I guess it would be the county there, to create a way where they can pass off the cost of running utilities and building roadways for the community that they're building to the future residents. And that usually comes in the form of an addition on your taxes. So, and I always get them confused. Which one goes away? Is it a PID that goes away or a MUD?
PID can go away.
It can go away
Mhm.
after they've paid off a certain amount of money towards it, but a MUD stays with the property for the duration. So it can add, I've seen, it add as much as 0.4% on taxes. So depending upon the community you're in, it could make your tax rate go from being like a 2.1 to a 2.5 or a 2.3 to a 2.7. And of course, that can be a huge increase in what you're paying over time. So it's something certainly not to be scared of, but if you have a good realtor, they should be able to tell you and advise you before you make a decision on that property. And technically, it has to be disclosed upfront to you before you close on the property. And if it's not, and you find out towards the very end, it gives you an out to terminate the contract without consequence. So MUDs and PIDs are something that you will have to be made aware of in advance before you close on a property. But certainly it's something to take into consideration and just be aware of.
Okay. Yep. That makes total sense. Here's what I'm hearing. Here's what I'm thinking as I'm listening to all the stuff that we're talking about is, if I'm a renter and I'm renting something, if I'm paying probably $2,800 or less in rent, I probably need to have a conversation with a realtor, find out if it's even feasible for me to kind of make that lateral move or not, and how far out, to Ian's point, what'd you call it? Drive until you can buy?
Yeah, drive until you can afford to buy, right?
Drive until you can afford to buy.
Your personal level of affordability, right? I can tell you all day, Jamie, you are qualified at $15,000 a month in mortgage, right? But if Jamie does not feel comfortable with that, then Jamie's going to say, hey, I want to be at 1,800. And well, that's what we're going to work with as a team.
Right. Yeah, I love that. So if I'm like around this 2,800 or less, I need to call. I need to have a conversation with Jamie. She's going to give me some good direction. She's going to help me figure out how far I have to drive until I can afford to buy. in conjunction with having a good conversation with you, Ian, about what do I actually qualify for.
And guess what? I won't even charge you for my free advice.
I love free advice. I love free, phone consultation. That's great.
Absolutely. I'm here to help.
That's good. Give me some good info so I can make a best informed decision for sure. But I also feel like I'm hearing that if I'm at that price point, I'm like maybe $2,500 or $2,800 a month or more, I really, really need to call and talk to the two of you, because it's likely that I could even buy in town and keep my house payment about the same, potentially get in with zero down or a minimal amount down. And now I'm in a place where my rent's not flexible and going up every year, and where I don't have to pack and move every year. And God bless it, I hate packing. And I really hate packing and moving when I'm in a second floor apartment, because hauling your crud down the stairs is just the worst. And so now I'm going to have the benefit of fixed payments, building some equity and some appreciation. I don't have to move, but if I choose to move and get that next bigger house, my more forever home, now I have this equity that I can put down so I can afford to buy the bigger house that's more expensive without really changing my monthly lifestyle, right? Like my monthly outgoing dollars. So do y'all feel like I kind of covered everything? Is that good advice for me as my little renter self over here?
That is good advice. And then the other benefit to owning versus renting is you have a tax write-off.
I love tax write-offs because we just talked about how terrible the taxes are.
Yes. So you get a tax write-off for your property taxes, but also you can write off the taxes on the interest paid on your mortgage.
Okay. So when it's April, I mean, gosh, tax day was just like earlier this week. You're saying I could have saved money on my income tax if I would have owned a house?
Yes. In fact, what
Maybe.
happened to me when I went from renting to buying is suddenly I actually got a refund from the government. Amazing.
I love that. Then you save that
money.
Yeah, save that for the next house, right?
Exactly.
I love it. Well, and there was one other thing that I think Ian said previously, maybe not today, but I remember hearing you talk about it before, Ian, was that I would also, if I owned a house and I've lived in it for a while and I've got some equity and maybe I'm not ready to move yet, but I kind of have a little bit of a safety net that if I needed some cash, maybe my kids are going off to college, or maybe just some kind of a sudden unexpected expense, that I would potentially have the ability to get a home equity loan and have some cash in my pocket without having to move, and possibly, being able to afford the thing that was sudden that came up, right? Is that kind of a good safety net example? Or
Yeah, I mean, I joke all the time with people that I view my house as a piggy bank that if I need to break into, I will. It's doing all the savings without me having to do anything. If you've been paying rent, it's like you're paying rent. But at the end of the day, if you need some cash, you can bust into that piggy bank and get out what you need using a HELOC. A HELOC is something that you don't absolutely have to pull money out of. It's just a line of credit that's addressed in between what you owe and what the house is worth. It allows you to tap into your equity without touching your primary payment and what you're already doing as far as your interest rate goes. And I've seen some go all the way up to 25 years on a HELOC. But you do have the ability to have cash at your disposal directly from your property, utilizing it.
so I have a safety net, but you're going to get a HELOC and I'm going to get a SHELOC, right? What is this lock? What is this? What is HELOC, SHELOC? What is this?
Well, HELOC stands for Home Equity Line of Credit, and SHELOC, I'm not sure. That must be a new product.
That's a made up one.
I just made that up. Is that what you're saying? Okay, I was just making sure what was really happening there. So I would get a HELOC too. All right, Home Equity Line of Credit.
And again, you don't have to use it. It can just stay open for as long as they'll allow you to keep that thing open. And if you need to, just go buy a pack of gum with it, right? And that way, you have a balance on there.
Why would I want to do that? Do I need that? That's when it becomes a SHELOC, right?
It's the old joke about having a credit card, buying a pack of gum, or doing something to keep it open and active.
Yeah, and then pay it off. Yeah.
Yeah.
Build your credit. Okay. I get
Mhm.
you. I get you. All right. Well, very good. Well, I feel like we've had a lot of good discussion on should I buy or should I rent and what's happening in the market, what's happening with interest rates and mortgage insurance and all kinds of stuff. And I think we debunked a couple of good myths like the 20% down. Jamie, is there anything else that you feel like I would want to know if I was trying to decide between buying and renting a house?
The other thing that I would say, because I hear this a lot from prospective buyers, is that they're going to wait until the market crashes because the news likes to talk about, and you know what? The reality is that perhaps there may be some markets that do have a little bit of a crash, but the reality is in our market in Dallas Fort Worth, we have a ton of businesses moving here. The economy here is really strong. And right now, if you look at the real estate market, truly, unless you're in the $1 million plus price range, there's only about not even 2 months worth of inventory, regardless of what county that you're looking at. So it's still considered to be a seller's market. Now, there are more options available and homes are staying on the market a little bit longer than a year ago. So from that perspective, it's a little bit easier to be a buyer. And depending upon where you're looking and the condition of the home, some sellers are being a little bit more negotiable and even providing money towards down payment or towards closing costs or to help a rate buy down. But the reality is, I don't foresee us headed towards a crash anytime soon, regardless of what the news may be saying. We just simply don't have the inventory available. Most people that are in their homes have quite a bit of equity in their homes. So if they did get into a situation, they could simply sell it and they wouldn't be headed to foreclosure. They wouldn't really be upside down in their home. So if the reason that you're waiting is because you think 6 months or a year from now, you're going to get a good deal on a home, guess what? Prices are going to continue to go up. So if you can afford to buy now, it would be wise to purchase now and just continue then to build equity. And then if interest rates come down, refinance in the future. You can't really time the market as far as interest rates and home values. But what I can tell you is from everything I'm seeing, it doesn't appear to be a situation where we're headed towards any type of a crash or any type of a bubble burst. I think right now the market, or I will say towards the end of last year, the market sort of corrected itself a little bit. And keep in mind, that was after we had basically 2 years of it going up, 20% a year in appreciation. So it just kind of corrected itself, but it's still continuing to go up as far as home values, just at a little bit slower rate. So if you think you're going to wait for a crash, you're going to be waiting probably a long time. Not that I have a crystal ball, but just all of the indicators do not suggest that there's going to be any type of a crash coming our way.
Okay. I love that. Good information. Ian, anything else before we get out of here?
Buy real estate and wait. You should always buy real estate and wait.
Love that.
Barbara Corcoran, I'm sure you're familiar with her. She's one of the
He's a
Shark
shark.
Tank,
Sharkettes on Shark Tank.
Shark.
the best one.
Yeah. And she said something the other day. She was like, I don't understand why the millennial generation and Gen Z that are upcoming to buy houses are afraid to ask their parents for help in purchasing their first home. Because it runs in tandem with another report that came out that said the vast majority of people buying houses right now of the millennial Gen Z generation, their parents are kicking in money. It's not like it's a weird taboo thing right now. It seems to be kind of almost the norm because their parents want to see them have something that grows in equity and things like that. So don't be afraid to have a conversation with friends, family, and things like that. you'd be amazed. In fact, we just closed one the other day for a family, and all of their money from their or for their home purchase came from their wedding. They just straight up told all their friends, hey, we're going to use this to buy a house. And their friends came with it. They had more than what they needed to buy a house, and they bought themselves a house. So don't be afraid to talk to somebody, ask people about how they're doing things. And my best friend, last thing right here, my best friend, when he bought, and it was a pretty crazy market. They had gotten all their money together. They didn't take out, they didn't ask their parents for money. They didn't use a 401k loan. They just saved their tax returns for 3 years. And then they bought a house. So they didn't spend it, didn't splurge, just kind of practiced saving that money. And then they used it to buy a house. Took them 3 years. That was it. Nothing crazy. Save the tax returns.
Good thought. I love that. And then once you own a house, to Jamie's point, you can get more money on your next tax return.
There you go.
And then you can do the same
And then you
thing.
can save that money. And with your equity, you can buy a bigger house.
That's all I'm saying.
Yep. I'm saying, I believe all of y'all have got good information, and everybody ought to own a home for sure. All right. Well, y'all, thanks so much for your time today. I really, really appreciate the both of you guys being here. I really enjoyed chatting with both of you. I hope that our viewers got some really good information tonight. We covered a lot of stuff. So thanks so much for being here.
Thanks
Of
for having
course.
me.
Absolutely. And I know I said it earlier, at the end of the night, we're going to make sure that we give away some great information about real estate. So Gabby, if you can just throw that link into the chat so people can get our free information about buying and selling houses and actually about the home buying process, we would certainly appreciate it. And I am going to put this back up here on the screen, or at least I think I am. Let's see what we got here. Dun, ta, da. And this is where I'm going to leave us right here. If you want more information about anything we talked about today, here's how you can reach all of the folks that you see right here. And definitely give them a call, reach out, ask questions about your specific information. We would love to help you guys out. So thanks again, everybody, and we will see you next time.
Thanks.
Thank
Bye,
you.
everybody.
Gabby, sing us out.
Yep.
I am not a singer, but I'll say goodnight
Dallas
to everybody.
Stars. Dallas Stars.